Good afternoon. This is Chris Robinson, Robinson Ag Market with today's closing grain and livestock comments. Well, all I know is this. I'm not. I always say this. I never really get so worked up about the why. Some people worry so much about the why, they miss the move. For whatever reason, in the last 3 days, we've gone from a 2 month low to a 1 week high. We've rallied 13 cents in corn, that 14 cents off the bottom. That feels like $1.40 at this point. We've done one key thing, which is what I wanted to share. We've gone north of the 50 day at 415, 416. We are north of the 20 day, which had been a really big resistance for a while, at that 419 and three quarters, 420 area. And we settled just on the 100-day moving average. 100-day moving average is at 421 and a half. We settled at 421 and three quarters. The only one left to go, kids, is the 200-day at 438. So are we going to get there? What's going to get us there? I don't know. Um, but that's what we're looking at. That's going to be a major, major, major hurdle to get above that 200 day. Really, our next we got so many hurdles. It's not even funny. So today's high 23 and a half. Great. We got to go get that July 4th gap, which is at 32 and three quarters. And then after that, we have the 200 day. So lots of work to do here. But again, I'll take what we can get, right? Up 5 cents on the day. November beans came off their highs, traded as high as 10.19 and three quarters, settled at 10.10 and three quarters, up 4 cents. Uh, More news out there. We're going to be solving the soybean problem with cooking oil. Now we're going to be solving the soybean problem by sending our beans down to South America and have them crush the beans for us. There's a lot of people who don't have a whole lot of understanding about markets that are out there putting stories out. All I care about is one thing. I don't care about if you understand the supply chain better than I do, or you know everybody that is in the cash grain business or whatever it is you think you know. The only thing that matters is price, and until we can get these beans above the 1040, 1050, I can't get too excited about it. So hopefully we'll get there. We certainly have some beans to sell if we get there. But in the meantime, I would sit tight. I would keep my put on the books, defend 1010 or $10 beans, which is what we're doing. And then the corn, we're just then defending 410 beans and hoping that we get a continued rally. A little bit of a rally in wheat, up 3 and 3/4 cent, settled at 502 and a half. Again, 3 days ago we were at contract low. So are you going to get bulled up and start calling the low in wheat? Most of you are going to be storing it. I would keep a cheap put under that as well. Um, the only thing that's going to turn wheat around is going to be if we do get a more powerful rally in the corn. So we'll see if that happens. In the livestock, a lower day only in the lean hogs. I'm looking at December, and if you've been reading my letter, you know that we've been watching this area right here, this 82 cent level. Why does it matter so much? It's just a retracement that a lot of people pay attention to. If you take the contract low back at, excuse me, the multi-month low back in April, and then we had the contract high. In April we traded as low as just under 67, 66 and change, 66.95. Then about 2 weeks ago we hit our contract high, 91.50. 2 days in a row, couldn't get above it. That was after a very bullish pig report. Since then, what have we done? Well, you get a bullish fundamental report. The entire world is long hogs, and there's no follow through. And we're about to test 82.20, which is a 38% retracement. So, is that going to hold? I don't know. If you're looking for that type of stuff, it is going to be a pivot. It's going to be a decision making point. So, bullish or bear, whatever your bias is, you have to have a plan for number one, what if it holds? Number two, what if it doesn't hold, right? If you're long and it doesn't hold, what are you going to do if we continue to go lower? There's support down at 79.25. That would be halfway back to the entire move. And then we could possibly go to 76. Now, me saying that that's a possibility is not a prediction, but it does suggest there's potentially more risk ahead for lean hogs. And switching back real quick to the positive in the protein complex, these fat cattle higher again on a day, new all-time high today. The new high for these fat cattle, 246.975. Couldn't get the 247 print. I've said this for about the last 2 3 weeks. I can't imagine we've come all this way and they're not going to get a 250 print. It's just too tempting. In the feeder cattle, a higher settlement after a small lower settlement yesterday, so we're kind of back on track there. We did not make new all-time highs though. That only happens if November takes out 382 even. 382 even. Today we settled right at 381, basically 380.95. So again, if we take out 384, that's going to be a big level. 384 opens up the door to $4 feeder cattle. I know it sounds crazy. Sounds crazy to me too. I ran the chart yesterday in the letter. I went back all the way, to go back to 2008. You want to see some low cattle prices? Go back to the COVID lows. So this has been a gift. We've been on a tremendous 5-year rally. We did the same thing back in 08 to 15. We had a 6-7 year rally. The market peaked out, and then in 2 years, we gave back half the rally. So are we going to repeat that? I don't know. I want to make sure that anybody that's working with me at least has a defensive position on to defend all this revenue that we picked up here in the past 10 months. So that's about it. This is Chris Robinson, Robinson Ag Marketing in the outside markets. Stock market, we're whipping around a little bit. Dollar is a little bit lower. Crude oil and diesel. I did mention diesel yesterday and today. Crude oil, trading at 57.26, lower again. That is a new low for the move. We're going back to where we were in crude oil back to May. So 5-month lows in crude oil. Are we going to go take out the April low, which was 55.12? April 9th that's where crude traded. If that does happen, it's probably not going to be very friendly for corn, just because of the ethanol issue. Corn does a lot better. Ethanol does a lot better with crude oil, around 70. But the silver lining is diesel's cheaper, right? So you've got a new 4-month low in diesel. Diesel futures trading this morning here at 215. Remember, it wasn't that long ago, back when we were at $55 crude, diesel actually traded $1.93. So is there more downside to go? Possibly. I would watch those old lows. But there's the silver lining to crude oil going lower. It's going to make your diesel prices lower as well. This is Chris Robinson, 312-638-8868. Give me a call if you're looking for help. If you're not getting my letter, you want to take a look at it, sign up. I do a morning letter and a daily letter. I do a morning commentary. I do this afternoon commentary. And then once a week, sometimes twice a week, if there's a lot to talk about, I will do a 15 or 20-minute breakdown. I'll share it with my clients. I'll dig deep into one of the charts that we're looking at during the day. My goal is to kind of use it as a teaching moment to explain to you what it is I'm looking at as far as who I am and why you should even care at all. I've been in the business over 30 years. Spent 18 years trading my own account on the floor of the Board of Trade. I was not a filling broker or anything. I just traded my own account. In 2010, left the floor and transitioned into working with farmers and producers as a risk manager, helping you defend the value of your product until you sell it, and also letting you participate in higher prices after you sell it if you want to. At the end of the day, that's what this is. You are a farmer. You are a net long speculator. You are a commodity trader. The only thing is you are always bet long. So your hedges need to be defensive ones where when we get good rallies, if you can't bring yourself to sell it, you set a hedge. It's not rocket science. I certainly have not reinvented the wheel. There are other firms that do exactly what I do. But if you're looking for fresh eyes, if you're curious about learning more, give me a call. Take care.